I do want to broaden things out, though, bring our next guest into the conversation. Joining us, friend of the program, Dale Smothers, President and CEO at RDS Wealth Management. Dale, great to have you back on. I was just looking over the S&P. We actually hit another new intraday record today. Yesterday we had one. We've got another one this morning. Got a nice boost from Disney on the Dow, a nice boost from Eli Lilly from their reports this morning. And you are maintaining your $8,000 target. We are getting closer now at 77.58. So what's it going to take to get us the rest of the way?
Sure. Marley, it's always great to be on the show, and we've screamed this basically since January 1. Earnings growth continues to take us higher. It is the ladder holder for this climb of the wall of worry. I feel like I say that every time we talk, but it continues to be the predominant reason as to why the market goes higher. I think you're going to continue to see this love-hate relationship with technology. We saw in June and July the rotation out of technology into other sectors. That broadening out is a healthy thing for the overall S&P 500. Clearly, the S&P 500 struggled just a little bit. All major indexes did with that rotation. But you saw sell-offs of 10, 15, 20, even 30% in some of these names that were once leaders taking the S&P higher. And you only saw the S&P drop 4 or 5%. This is a great thing for a little bit of a breather, if you will, on this sprint. The sprint to 8,000, though, is likely going to have a couple of stumbles between now and the end of the year. I'm going to tell you, I think it would not shock us at all if we saw us maybe touch a 7,100 point before we get to 8,000. This volatility is going to be in the mix. You just got to be prepared for it.
No, Dale.
I know. I hate it. I hate it. And I can't put a pin on it, but I'll tell you, the love-hate relationship with tech is what's driving this volatility. You've got over-levered purchasing on hedge funds. This is one of the big reasons we saw, just the 2 weeks of deleveraging of these major hedge fund organizations, and one in particular having to be bought up by Citadel. It really caused a lot of this immediate knee-jerk selling, and then you get into mechanical selling, and then again, more fear selling. This whiplash effect, we positioned our clients very well for it. At the bottom of this, we were buying some small cap names. We were leaning into leadership that we knew would bounce back. But don't be surprised. Remain disciplined, even with extreme volatility. 8,000 is coming this year in our book.
And you bought some big names, too, when they were down near their lows. I know we've got Microsoft, Amazon, Applied Dig on that list here. What told you or what informed you that the conversation was going to potentially change in the favor of these big spenders? I mean, we have seen some heavy punishment for the AI spend, but we also have seen some rewards for any sign of ROI.
Very, very true. The investor wants to see profitability now, Marley. This is the story. The next innings of AI are going to be built out by profitability. Now, what told us that? Well, we've got our crystal ball in the back. We just go in there and we visit it, and it tells us exactly what stocks to buy. No, I'm just kidding. No, the reality is the tea leaves were kind of telling us that a lot of these names were being sold off far too aggressively. The market had a lot of these names wrong, and one in particular I still think it has undervalued is Microsoft. You mentioned that right at the top of that list. Microsoft's a $600 stock in our purview, and the reality of that becoming $600 will increase the clients that we have there. It will increase the dollars that we have there quite a bit. We've got quite a ways to run up from where we are to where we believe Microsoft will be. And the big problem that we're facing is too much spending in AI. But these companies that stand to be profitable with that spending, Amazon is a great place to maybe look as an example. When we heard the earnings with Amazon, we knew profitability is just right around the corner with some of these names, and we've been leaning into leadership, just like you said, Amazon, Apple, Microsoft. We bought it heavy on these dips, and the good news is the saving grace has been Apple for us, because June and July, it pretty much held up. And then whenever we saw that little run up with Apple, we sold out, took those profits and repositioned. We saw a little bit of a run up in Amazon. We trimmed that position, bought more of Microsoft in particular, because again, we think it has room to run.
All right, and this one is very timely. I know that you have long been a supporter of Palantir, which had come under quite a bit of pressure. Certainly a good time to be an investor in Palantir following this most recent earnings report. What did you learn here from the earnings report? I mean, did it come out as you expected here? And how are you looking at Palantir now that we've I think almost erased year-to-date gains with the run-up that we've seen? Not quite yet. We're still down on the year.
Yeah, Palantir has been one of those, again, it kind of boggles the mind as to why it got sold off so aggressively. The reality is it's spending a lot of money, but it is likely to be the operating system for AI to come, especially on the battlefield, in the hospitals. It's got government contracts. We really like Palantir. Say what you will about Alex Carr and his erratic behavior or appearance, but the reality of Palantir being in our lives from day to day, I think, has already set in. We don't understand everywhere that it is impacting our lives, but I do believe Palantir is a long-term buy and hold for us. We've held it for quite a while. We bought it and we saw it fall. We bought more at the dip, and that has been handsomely rewarded, and we still see upside, and the earnings would suggest just that as well. A blowout earnings report and a continuation of that growth for the next 24 months, according to some of the data that we were reading. So, I think Palantir is a buy and hold for us in our book. And again, I want to be very careful here, Marley. It really depends on what your money is supposed to be doing. Just throwing money to an investment to grow makes sense in growth phase. But when we start working with retirees, every dollar needs a job, and every dollar in that portfolio needs a different job. The money that's out there hunting for big gains long term, not looking to pull that in and put it in our pocket in the next 6 months, looking at places like we've just mentioned, Palantir, Microsoft, still got room to run up. We like those names.
And Dale, you bring up something in your notes I have not talked to anybody about yet, so I want to really shift gears here. You say investors are paying too much attention to what's happening in Iran and not enough to China, specifically mentioning China's push into Africa. So take me through that.
It's developing, and so I want to be very careful because I'm clearly not one to break anything here, and I don't know all the details, but I have enough military friends, let's say, some in higher ranks, that have really voiced concern to me about the Chinese agenda in Africa and going in and basically fortifying infrastructure there to essentially claim land, and then again to claim the hearts and souls and minds of the African people. And the reason for that is minerals. What lies under the earth in Africa is essentially going to be the new age oil, minerals and rare earths rather. That is going to be something that many countries around the world, especially as we compete for AI dominance, China and America, there is a clash that is occurring here. We're concerned about Iran. We're concerned about Ukraine. We should be. A lot of souls, a lot of lives being lost there, a lot of stupid decisions being made. But the real battle is over minerals and who controls the AI race. And the issue with what we have to deal with is that every 4.5 years, things change. It may take 6 months for a new administration to re-gear and reposition, but a different administration has different views and stances on certain things, AI being one of them. We saw that with this most recent election. And so we really don't have a true agenda just yet in how we're going to help the African people. We're coming in with, and again, I don't want to get too deep into the weeds here, but there is going to be a point in time where, and it may be a year from now, it may be 2 years from now, but that Chinese agenda in Africa is going to likely be the next frontier that we start hearing about. And the Strait of Hormuz is important. There are other straits closer to China. China's a foe for us, and we've got to win this AI race because they have an entirely different worldview. We've got to pay attention to that.
Dale, really appreciate you joining us to take a closer look. We got through quite a lot there, so really appreciate you taking the time. Dale Smothers, President and CEO of RDS Wealth Management. And don't go anywhere. We've got a lot more